24th of May 2023, Wednesday, MAO with Cal once again. Now, are the Saudis warning the Americans right now? Apparently, last few days, crude oil prices have been going up. Yes, indeed. And there's no reason for that, right? If there's going to be a recession, there shouldn't be this happening. But prices going up, and it's because the Saudis are warning some people, the short sellers. And I cannot deny this. In fact, I just feel so clear that this is aiming at the US. What do you think? Now, the next thing is that the luxury stocks yesterday sold off. In fact, last 2 days have been selling off. And is that a sign? Because we all know that when people start to tighten their belt, right, they won't be buying luxury products. And of course, this is something that we need to look at it, because if this is going to be a turning sign, this could be a catalyst, a sign or a turning point for the stock market. So let me tell you more in great details. Don't miss this. Forward and like this channel, this video today. Right, before we go into that, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, so as I said again, guys, we have more than 200 people trying out my TCS, and they really like it because it basically helps them to make it simple, it's easy, and it's consistent. All right, very reliable, all full of colors. You just need to follow and trade according to plan, because the simplicity, the accuracy is there. In fact, now we have even included something very special, and that should have helped many traders to make money over every single day. This is not a joking matter. This is real, and it's happening right now. And you can see from all the testimony given by all these students of mine that explain everything about us. All right, so contact us through Facebook, and we will get back to you ASAP. All right. Now, let me explain about this US debt first, because a lot of people are asking me, and I'm going to tell you this right now. US debt ceiling is the current debt they have right now is 31 trillion. In fact, it's $31.8 trillion. It's amazing. US owe that amount of money. The thing is this right now, is that it's just a credit card, okay? Visualize credit card. If your credit card is given to you, your limit itself is 10,000, it's 10,000. You can't go any higher unless the credit company tell you that, you know what, okay, Mr. Han, let's go for 2,000 extra, so become $12,000, and you have 2 more thousand to play around with it. So every time when US basically hit their so-called limit, they ask the Congress to increase the limit so that they can spend more money. Now, of course, everything comes with a cost. There's interest to be paid. And unfortunately, US interest rate right now is so much higher than 2 years ago, and this is all escalating. Now, don't forget, the thing is this, a lot of the money that they utilize now are from the US bond side, and bonds, you need to pay interest. So think about this. Imagine that if, let's say, US can't have money in the kitty bag, they can't pay the interest to their so-called creditors, aka the bondholders. I can tell you this, the entire America will collapse. So it is very clear that they will have to increase the debt ceiling, because US cannot afford that. They can drag their feet, they can talk all they want, but you cannot imagine if one day US say, you know what, all the bondholders, I can't pay you back. Now, there's something in the Constitution that actually allow US not to pay. I saw it, but it's really incredible. So I'm not going to go do that, but it's too legal for me, but it is possible, all right? So with this ongoing right now, there's suggestion that what can they do, right? One of them is to print a $1 trillion coin, which is really very possible, so that it basically helps the situation. Or if not, right, they can actually do is that they sell $1,000 treasury bonds at 10-year coupon, and 10% return. So which means that, example, you put $1,000 with a bank of the US government, they pay you 10% per year for 10 years, then you get 100%. It is possible, and they get a lot of money immediately, because I mean, they don't expect US to crash, neither to disappear from the surface of the earth, right? So it is all possible. Now, a lot of suggestions going on right now, but I can tell you this, to default it's not, but to create some problem, I'm pretty sure it'll happen pretty soon. Now, last night, the Dow Jones lost 231 points and the NASDAQ down by 177 points, which is something I warned 3 days ago. I've been telling you guys this, take profit on the NASDAQ counters, because there will be profit taking coming in, and truth be told, it really happened. Spot on, yeah? Okay, so Microsoft down by 1.8%, Google almost 2%, Meta down by 0.6%, and Apple down by 1.5%, Nvidia down by 1.5 or 2. But the thing that caught my attention was not the technology, was this Berkshire Hathaway. Now it's down by 1.83%. Now this is something that I want to talk about because we all know that Warren Buffett, all right, this counter itself is one of the most stable counter to be down by almost 2%. There's a question mark here. So the thing is this, let's see what CNBC had to say. They say that it's because the debt ceiling talk have dragged Washington and caused things to, like, people getting a bit worried. So the so-called June 1 ex-date expected by Treasury Secretary Janet Yellen is fast approaching. We are like 7 days away. And of course, we all know that the chance of this happening on the 1st of June is really very low because there's any breakthrough between McCurdy and Joe Biden. The thing is this right now, it's obviously, I mean, telling you guys this, the market will try to sell a bit more so they freak everybody out. Then after that, they will have the debt ceiling settled and then price will recover for a knee-jerk effect. But if the whole deal is not really fair, not feasible, nor doable, then the selling will resume once again. So this is something that I've been saying in MAO. I really hope that you guys have caught it because you can see right now the market was okay. Then when they realized that there's no more positive talks between the two guys, bang, the market came off. All right. So the thing is this, why I talk about Berkshire Hathaway. Now take a look. Now this is the one in the candlestick is the Dow Jones. Yeah, sorry for that. It's the Dow Jones. All right. Okay. Sorry, the one in candlestick is Berkshire Hathaway stock. My bad, sorry for that. And the one in blue, the one in leader is the Dow Jones. Now you can see it's almost incredible. Berkshire Hathaway and this Dow Jones, they really move in tandem, which means that when the Dow Jones goes up, Berkshire stocks goes up. And if the Dow Jones goes down, Berkshire's price goes down. So it's really like the key, what they call biggest, one of the follower of the Dow Jones, right? Very closely following it. So when I see that the market down by the stock down by 1.83%, all right, with a bit of volume yesterday, I kind of worried, and I felt that right, this could be a indication that the Dow may have to trade lower. So it is possible that Berkshire Hathaway stock may have to come down to about 305 in the near term, and that will loosely translate that the Dow Jones may have to drop to 32,000. Well, that is really, really crazy. Because now where we are right now, the Dow Jones at 33,000 to hit 32,000, we need 1,000 point to drop. But is it possible? I kind of think it is really possible. Yeah, what do you think, guys? All right, and of course, if you look at it in a long tilt, right? This is since 2014. You can see that Berkshire Hathaway stock and the Dow Jones really move in tandem, even during the COVID period, even during the recovery period after 2016. You can see that it's really, really tagged onto itself. Now, of course, because Berkshire bought across the board, right, many stocks, which is like blue chip stocks. So it is like, of course, you will say that it is. But to me, it's all right. The thing is, to me, is that right, this stock should be a little bit better. But now it's moving faster than the Dow Jones. Is that because there's some indication that things may happen? So what do you think? Let me know. All right, the thing is this is very interesting. I saw it yesterday. Now, apparently, Sherry, she's from Morgan Stanley Private Wealth Management, right? It's a senior portfolio manager. Apparently, she is saying that she is actually bullish of the market. But the thing is this, her colleague, Mike Wilson, says, no, this is like, no, this is not the new bull. In fact, it's going to be selling. So interesting, coming from the same house. Okay, this is where it gets interesting. So you can Google it about what Sherry Paul say about her view of being bullish. This is going to be fun. Yeah. Now put it aside, but Citibank is actually saying that now there are buyers coming in, pouring $21 billion into the stock market. And in fact, it's all right. They are pretty ready that there's a chance the stock market S&P will break through the 4,200. The thing is this right now, the momentum is clear and the positioning is increasingly one-sided. Wow. The longs outnumber the shorts by 9-1. Oh my goodness. Now, when you see these numbers, right, I can tell you this. It basically makes me very happy. Why? When everybody is on one side of town, literally, in my experience, you just had to walk to the other side. And that's the reason why the last few days, I've been calling for sell in the market, because it's so simple. Think about this, if everybody is long in the market and the market doesn't go up anymore, the market, if it comes off, these people who are long in the market will be killed. Hence, therefore, the profit margin for Wall Street is going to be amazing. So basically, this thing itself echoed Goldman Sachs prime brokerages. They say that now there's a lot of hedge fund coming in and they are buying US shares for the last 2 weeks, and the pace is actually the fastest since October. So if you telling me all this is all right, it's undeniable. If I am Wall Street, I will make sure the share market comes off. What do you think? Let me know, right? So the thing is that every chart is drawing now this 4,200 technical point. Everybody believe that this is going to break and it'll go higher. So that's why I believe that it is possible for the S&P 500 to drop instead, all right? The thing is this right now, they are saying that the volatility spread suggests calmest markets in a year. That means that now things is so low. Things so good, there's no reason to have volatility in the market. But then again, I have my reservation because later on show you my VIX chart. Nope, it has went up from 16 to 19. That means it's up by almost 15%. So I don't think I buy this, but then again, this is from Bloomberg. I'm just sharing with you. And apparently now the S&P equal weight performance gap is the biggest since 1999. So that means that, right, the thing is that the bigger shares are doing well, but the below is the one at the bottom or below the 5 counters are doing not so good. That's why the gap itself is big. And isn't that very dangerous? Because we have seen it before. Back in 1999, we've seen it before. When this actually happened, what happened to the stock market? It actually got sold off. In fact, itself, right? You look at it, when it's so bad, when the gap is so negative, that is the bottom of the market. So don't you notice that this is not actually a sign to call for buying? But again, I'll leave it for you to decide. Yeah, the thing is right now, short sellers are adding more position in the market. Apparently, regional banks stock did rally, but the thing is that the ETF tracking group says that now there are more people shorting the market, although their losses has amounted to $1.1 billion at the moment. So traders added 2.1 billion to the regional stock market, to the regional bank side, but we do see the bank shares climbing up. So obviously, someone is losing money, and you can see that M&T Bank Corp, Zion Bank Corp, Western Alliance Bank Corp, Bank Ops, all these counters have added more shorts recently. So if you'd ask me, you can look at this one and see whether you find any reason to short these counters. So while the market is saying that it will stabilize, things are good itself, everybody's buying, and the market is going up a little bit, but the internal is not doing well. And the thing is right now, the luxury stocks just lost $30 billion in a single day on demand fears. Apparently now, Deutsche Bank says that investors could get more selective, and analysts flag down slowdown in US as a growing concern. So you can see that luxury stock actually came off the last 2 days. We can see pretty clear LVMH, Kering, Hermes, all down, all right, all down. So all I can say is this. All we know that when luxury products coming down itself, is most likely they know that the economy is going to go down further. There'll be more tightening belt. Hence, therefore, it makes sense to exit, because why? You must understand, these stocks have been going up incredibly since 2021 all the way. All right, the ratio is increasing. It's increased quite a fair bit. So to take profit right now makes a lot of sense. And of course, if that is going to be a sign, it's a sign to tell us that you must be careful. Stock market may be pulling back soon. And of course, for my personal view, even though I also have my same drawing at 4,200 would be the very important technical point, but from the weekly chart, I can see that the second week in a row, there's some strong resistance at 41.94. Hence, therefore, if the market cannot stay up, the selling should be able to bring it back to 38.53 level, and that means that for the Dow Jones to drop by 1,000 points, it is relatively possible, yeah, because every one point S&P is about 8 points of the Dow Jones. So if we do the mathematics right now, 41.45 towards the downside of 38.53, okay, so you do the mathematics here. So here will be 2, then here will be 14, and here will be 9, and of course this will be 11, then this will be 3, and this will be 1. Right, that means, oh yeah, is that much self? Okay, no, that's not, it's 3, yeah, okay, 392. So 392, all right, times by 8, all right, you get a bit of number, right? That's about 8,624, 2,400 points. So of course, we don't expect the Dow to drop 2,400 points now, but to drop 1,000 points, it is very, very possible. So let us see whether my analysis will be right. Yeah. Now the thing is this: if I use back my TWB chart system itself, right, I can tell you personally that we have a CCYR on the chart right now. CCYR stands for yellow turns to red. It's a sell signal. And of course, we use conventional technical analysis with a very strong trend line around 41 level, right? 41 level. And of course, I do suspect that the market may drop to 41.12 later this week. Okay. Now, indicator wise, we have boys selling already. You can see that. But overall, it's all the momentum is still kind of positive. So we haven't come to the point that the selling accelerating yet. We're still turning down very gently. Let's see how it goes over there. Yeah. Now, why am I saying that Saudis are not happy? Apparently, Saudis tell short sellers to watch out, okay? Watch out. Wow, very strong statement. Apparently, Saudi Arabia issued a warning to short sellers, suggesting that OPEC Plus might reduce output to buoyant prices. Oh gosh, they did that recently, right? Remember? Yeah, they did it. The price gap up by about 10%. Then after that, it just came off. Now, the time itself, I did say this before, if the price comes back down, it will cover the gap, and it really happened. And you can think about this, the only person in the world that will do that right now, think about this, it's only the Americans. So to me itself, right, this statement is pretty clear. It's actually aiming at someone, right? This Saudi Arabian energy minister, Prince Abdulaziz bin Salman, short form MBS, all right, is saying that speculators, watch out, yeah, watch out, yeah. So if they will review these things and change. So of course, if the crude oil price goes up, inflation worry will repeat again. And of course, the concern will spread back. And that means that interest rates have to be hiked again. So this is again a slap in the face right now with US now having problem with the US debt ceiling. And now the Saudi are giving this thing here. I believe that that could trigger another wave of upside. All right. So the thing is this, we all know that, right? The US nationwide crude inventories has declined by 6.8 billion barrels last week. So this is not a good sign at all. And of course, the only thing is that pulling back is China lackluster economy. But think about this is not important right now. The main thing is if crude oil price goes up, costs will go up. And of course, things will get pretty bad. Now, one thing is that I've been showing this chart for longest of time. This time around, I increased the 2014 chart. You can see right now, when it was 0 back then to the high of 129, you can see the Fibonacci very clear that we have a very strong Fibonacci at the $64.66. All right, 64.67 cents. You can see that it got itself supported beautifully for 2 occasions. Hence, therefore, I believe that this could happen again. So if crude oil price ever come to this price again, this will be a very strong buying indication for me. And in fact, it's all right. If prices goes up, back up again, I believe crude oil will see $80. And of course, $80 is something that the US doesn't want to see. So again, this is going to be a very interesting type of war between the two powers. And I just strongly believe that the one that's controlling the pipe will likely win. All right, so using my TWB chart itself, we can see the difference here. Well, we have the boys are buying. All right, since the last few days, they really been buying. So I basically had the information about to call for buy without even a Saudi saying anything. So that is the TWB power. And of course, the momentum now is also very positive. The only thing is my KRW, the momentum indicator itself is still kind of sluggish right now. But if this one turns to blue, that's it. There's a chance that crude oil will see $80. But of course, if the recession fear comes in and is stronger than it is, then crude oil may come back down to $68. That is where the first technical point is. And of course, plus the earlier price, 64, 67 price I mentioned earlier. But to me, it's all right. Chance of going $80 is much higher. And of course, if you want to buy some OXY counter, right, the one that Warren Buffett been buying, you can consider doing that, yeah? So now the thing is this, based on what I've been telling you about VIX itself, right, this is not a good sign at all. Now, VIX basically came down, hit 16, and that was the level that I mentioned. It will be strongly supported, and it really happened. And in fact, now for the weekly chart, we can see that VIX is back up to 19. Now, this is a spot market, very different from the CFD, so please take note. Now, the indication tells me that there could be more upside, and I cannot deny this. I do see 22 to 23 being traded. And of course, from that means that there will be a 10 to 15% from here itself. So likelihood for the Dow to move down by 2 to 3%, it is actually very possible. And if you look at the the daily chart, this weekly, this daily, you can see the last few days, the VIX really hit 16 very nicely and then rebounded. And so from the way that this is one going on, the momentum does speak for itself. I believe that 22 to 23 could be happen by probably next week because of the US debt ceiling issue. Yeah, and there's something ongoing right now, not confirmed yet. I haven't seen the exact quoting, but this is ongoing on the social media. Apparently, JP Morgan is suggesting that to buy the $25 to $35 June expiration call spread on the VIX. Right, this is very interesting because this is not, how real is this? We don't know. Yeah, so it's from the social, from those little what do you call on Twitter, and then we extracted this itself to just share with you. But how truthful is this? We don't know. Yeah, how genuine is this? We also don't know. So that's all I can say, guys. Things is getting a little bit interesting here, and who knows, we may be looking at a big gain very soon. All right, guys, thank you very much. Take care. Have a great day. Bye-bye.